Remains on the economy. It's the big question of our times, and day after day, the forecast is gloomy. The latest, of course, came when the IMF yesterday forecast that the Indian economy will shrink in fiscal 2020-21 by 10.3%. That's double of what they had predicted just 3 months ago. But there are some pieces of good news. The IMF suggests that there will be a bounce back in 2021-22. The big question, though, is how will this revival take place? How dire could it get? What are the risk factors? Those are some of the questions that I have posed to the IMF's chief economist. Dr. Gita Gopinath is my top focus this evening. Take a look at our special interview on the state of India's economy and the world economy in the age of COVID-19. And joining us now is a very special guest. I'm joined by the IMF's chief economist from Washington, D.C., Dr. Gita Gopinath. Appreciate your joining us, Dr. Gopinath. I want to come to first the big talking point of your World Economic Outlook report that you released on Thursday, which says that the Indian economy will contract 10.3% in the financial year 2021. Now, this is much worse than what you predicted, the 4.5% degrowth in June. What explains this dramatic change?
Rajdeep, what we've seen obviously in India over the last several months is the surge in the pandemic, the longer duration of containment measures that has necessitated. And because of that, we saw what happened in the second quarter, which is with the exception of net exports and public consumption and the agriculture sector, there was a very broad-based collapse in activity everywhere. So compared to June, going forward, we expect to see a slower recovery, which is why if you add the growth over the 2 fiscal years, India falls short by around 2.4% relative to the 2019 levels, if you include this fiscal year and the next.
The reason I'm asking you this is a lot of government officials tell us the worst is over. But when you think of a contraction in the economy of over 23% in the first quarter, April to June, and now when your numbers come, the RBI numbers come, the World Bank numbers come, it suggests that if at all there is any recovery, it's very slow.
So, the April to June numbers were dire, and we will see with the reopenings there will be recovery. So the numbers that come in the next quarter are going to be positive. They're going to be obviously not in terms of quarter on quarter, we're going to see growth. But indeed, the pace of recovery that we have is gradual, and you're not getting back to 2019 levels until 2023 or so, around then. So this is a long walk. The second thing is this is not just a hit to the near term, but it's a hit over the medium term, and that's true for many countries. For instance, in the case of India, if you compare what we had projected for India before the pandemic in 2025 to what we are projecting now, India's GDP is going to be about 13% lower in 2025 than what we had projected pre-pandemic. So this is not a transitory effect. What we are forecasting, and this is true for many countries, is a much more medium-term effect in terms of lost output.
No, I take it that the pandemic has changed the rules of the game across the world. But from what I can gather, India seems to have suffered more than many other emerging market economies. At double digit, at 10.3%, it appears that India has taken a bigger hit. In fact, even within the South Asian region, and this has become a contentious talking point again, Bangladesh seems to be doing better than us.
The pandemic has hit India, hard. Initially, the government responded quickly with containment measures, but of course, you did see that initially it looked like maybe this would be controlled, but it hasn't, and it has increased, and it still remains a problem. So as long as the health crisis is there and of the severity that it is in India, you will expect to see very large hits to activity. But with reopenings, you will see a return. Now, of course, there are pre-existing conditions in India too, in the terms of the strength of the financial sector, and we have issues over there, and that can weigh on the recovery going forward. Similarly, vulnerabilities in the corporate sector. So all of that are what will, dampen the recovery to some extent. But again, lockdowns have hit growth in many parts of the world.
Again, the reason, from what you're saying, 2023 at the very earliest, before we actually see something that resembles a full recovery, that really shatters this theory of a V-shaped recovery that we keep hearing of. Every time, again, one speaks to government officials, they say, we're going to go through a V-shaped recovery. The next 2 quarters will see a dramatic rise. Your outlook doesn't suggest that. You're being much more pessimistic. You're saying it's only at best in 2021-22 fiscal that the economy will sort of revive by about 8%. But that's again on a very low base.
So yes, so there is no V-shape, that's for sure. Right? This is not a V-shaped projection. What it will look like is that you will see a rebound in growth, just coming back from the depths. But then that's a partial recovery. It will not be all the way back to 2019 levels, even by end. I think we have it going at least until sometime in 2022. And so no, this is not a V-shaped recovery. It's somewhere more between a V and an L in terms of the recovery, and it's gradual. This is, and as long as this health crisis isn't over, the downside risks also are many.